Based on the latest available indicators, the Bahamian economy is estimated to have grown at a slightly moderated pace in 2025 when compared to 2024. Growth in tourism earnings supported the outcome, with pricing improvements bolstering otherwise capacity-constrained performance in the stopover market, alongside a sustained and robust expansion in cruise output. Foreign investments also provided continued stimulus, and with tourism helped to boost employment. Expanded domestic lending supported both consumer spending and local investments as loan default risk further reduced. The economy also supported improved fiscal indicators and further narrowing in the overall deficit. For 2025, the Bahamian economy is projected to have grown at a rate close to 3%, after an estimated 3.4% rise in 2024. This remains above the medium-term potential, which is still projected just under 2% per annum. For tourism, although stopover performance was constrained by limited hotel sector capacity and softer U.S. travel demands, earnings were still bolstered by appreciated product pricing, sustained expansion in vacation rental sales, and arrivals gains from non-U.S. visitors, notably from Canada. The cruise market also continued to experience robust growth, buttressed by steady investment in private destination facilities. Foreign exchange market activities strengthened in 2025 as well, aligned with inflows from tourism, investments, and other private sector activities. In particular, commercial banks' total purchases of foreign exchange from the private sector increased by 4.1% to $7.6 billion in 2025. And this was accelerated from an estimated boost of about 2.4% in 2024. In line with increased demand for foreign exchange, for imports and other payments, commercial banks' total sales of foreign exchange to the private sector also expanded at an accelerated 5.1% pace to $7.5 billion in 2025. While the resulting residual net sale or proceeds from commercial bank to the central bank, which impacted the outcome for external reserve, was less than in 2024, the external reserve balances still grew by a larger amount in 2025, closer to $170 million as compared to about an increase of $115 million over the same period in 2024. And this was because the central bank also made, in the period, a modest net purchase of foreign exchange from the government sector, as opposed to a small overall net sale to the government sector in the previous year. As at the beginning of February 2026, the external reserves were estimated at about $2.86 billion, which is about $200 million higher than at the same point a year ago. The central bank, though, had forecasted potentially lower end of year levels for the external reserves in 2025, and this did not materialize for a variety of reasons. First of all, it was based on projections for faster credit growth than was realized during the year. In addition, there was an unanticipated, though modest, net retention of proceeds, which were just mentioned, from public sector borrowings, and there was relief from a reduction in the average imported cost of fuel. And traditionally, the amount of foreign exchange that we spend on fuel in any given year is one of the largest single item of expenditure that makes a call on the foreign exchange usage. At the same time, the earnings on the invested external reserve balances provided some further uplift. The foreign reserve, therefore, continued to be healthy overall, and therefore able to tolerate an increased pace of private sector lending over the near to medium term, which the central bank is continuing to accommodate. As the private sector credit, growth was moderated in dollar magnitudes to around about $330 million last year. $330 million in 2025, from about $350 million worth of net lending in 2024. This represented a slower rate of increase of about 5.5% compared to 6.1% in 2024. Both magnitudes of increase still should be viewed as being healthy trends for private sector credit. In these regards, while mortgages grew by a lesser dollar amount than the year before, consumer credit expanded by almost the same pace, and commercial lending was accelerated, and some of that acceleration represented credit that was flowing into some of the energy sector projects. In the meantime, the lending risk in the environment continued to diminish. The delinquency rate for private sector credit, that is the share of loans that were 3 or more months behind in payments, decreased to just 5% in 2025 from 5.5% the year before. So that means that the default risks have trended slightly lower again last year. Overall, lending conditions improved with a high volume of credit applications being processed by banks and approved. But lenders still assess that they were constrained from satisfying many applicants who did not qualify for credit for a range of reasons, including underemployment, having high existing levels of indebtedness, and sometimes insufficient clarity from the perspective of lenders around the permanence of the jobs that applicants held. As to inflation, the most recent data for the Bahamas was only available up through the middle of 2025. And on a 12-month basis after that point, average prices were estimated to have fallen marginally in the Bahamas, which would have signaled that the inflation rate over that period was a negative estimate, as opposed to an increase in average prices that was recorded in the comparable period the previous year. But even still in that period, the inflation rate was very moderate by recent experiences. And the recent inflation experience reflects savings in energy costs and reduced pressures in import prices up through the middle of the year. It should be expected, though, that the inflation rate would have experienced some uptick over the remainder of 2025 as we would have experienced more of the U.S. Tariff policy effects in terms of being passed through in the cost of goods and services being imported from the United States. That said, with global inflation threats more diminished on the whole, the negative consequences for the Bahamian economic outlook have also subsided. That is, there's been an easing of the strain on the level of foreign exchange needed to pay for imports. There's been an increase in the upside potential for foreign investments as international interest rates now have more room to decrease in the near term. In addition, the prospects have improved for the public sector to contract lower interest rates on foreign currency borrowing as a result of the easing in the inflation risk. Turning more directly to the outlook, in 2026, the growth of the Bahamian economy is expected to remain above its medium-term potential. On the upside, with the U.S. contribution to stopover projected to strengthen, stopover earnings in the tourism sector could stabilize or improve incrementally and, along with vibrancy in cruise activity, help to at least maintain the same rate of gains as was experienced in 2025. Additionally, steady to accelerated credit growth is expected to maintain or support elevated levels of domestic demand, spending on imports, and therefore, as we expect, limit any potential for boost or growth to either external reserves or bank liquidity. However, these are developments which the central bank is fully accommodative of, given the existing healthy levels of external reserves. The domestic financial environment is also expected to sustain an expanded share of public sector borrowing needs in the context of continued overall fiscal consolidation. However, while the near and medium-term risks to financial stability and the Bahamian dollar exchange rate are contained, we should be reminded that there are always downside risk in the external environment that helps to frame the way we manage our affairs. They include the evolving and uncertain policy environment around trade, geopolitical tensions and conflicts in the Middle East and Eastern Europe, which could collectively disrupt tourism and the economy. And therefore, the central bank in this environment remains vigilant and ready to adjust policies as necessary to ensure that the outcomes are desirable and best insofar as the financial sector and the economy are concerned. Thank you. So we'll pause and take any questions you have.
Just, Governor Rowe, the idea is going back to the idea that the stopover sector is constrained by hotel room capacity. How does that relate to capacity in the Family Islands versus capacity in the Providence? Because I know in the Family Islands, you don't hear large occupancy numbers throughout the year as such. So there is space for more occupancy in those hotels. So how do we qualify the idea?
Well, I think we have in the numbers also seen, the performance trend, I think move similarly because, the Family Islands would have been impacted, say, for example, by, if you add Exuma into that. So there are fewer rooms available in Exuma. There were impacts in Abaco, post-Dorian, in some of the resorts. Some of it has been restored. But I think in the Family Islands, you sometimes also see that the vacation rental market is very strong, and therefore some of the offsetting impact is in the vacation rental side. Particularly, I think we've seen that in the case of Exuma. The tourism experts would probably also point to the fact that depending on the overall inventory that you have, it still impacts, the range of prices that can be marketed for visitors coming to the destination, and it's having that complementary range of option, I think, that still boosts sales and occupancy in whatever inventory that you have. And I think some of that could also be impacting. The other thing to be mindful of, too, in terms of the capacity in the sector is that the average visitor in the stopover segment does not spend 7 or more days in the country. So even though for a period of the Monday to Sunday, you might have full or very high occupancy, in between, you could still have very low occupancy in midweek that impacts the averages. And so you're still constrained technically by how much capacity you can handle on the weekends if all of your arrivals are concentrated in the weekends.
I guess going back to that and the growth that you projected for 2026, because you had said that the expectation is that stopover visitors would increase at some point in the year. But what if the trend kind of continues in line of what we saw this year? How would that, affect the estimates that we currently have?
It's always a forecast. What we're saying is that insofar as the forecast is concerned, the conditions are more favorable for growth in the U.S. component of the stopover market. And if you add that to the other parts of the market where we saw collectively growth this year in terms of visitor volumes, collectively it presents the industry in a strengthened position, or the outlook is that the industry will be at least as strong as it was last year and potentially stronger.
What are some of those trends?
Well, in the U.S. case, we had a reduction in total, estimated reduction in U.S. visitor arrivals last year in the stopover segment. We do not expect that to continue this year. And so that in itself makes a difference because the U.S. market is the supermajority in so far as total visitor arrivals are concerned. And that supermajority really overshadowed a considerable amount of the upsurge we saw in non-U.S. visitors in the stopover segment.
So can you tell me a bit, I guess switching gears a bit, about how the RFP for the fast payment systems has been going, and I guess are you pleased with the responses that you've seen so far?
We got a nice number of responses. I can't quote the exact number, but we're very satisfied in terms of the number of responses and the quality of the responses. So we expect that the evaluation committee will complete their assessment, and as we progress through February and into March, we should be able to make some announcement around a selection.
Given the improvements in lending, how does that speak to what's happening with credit reports and credit ratings? Or how do you view that in terms of the people who are coming forward for credit? Are they just people who would qualify, or people kind of falling by the wayside because maybe they know their credit isn't good?
Well, what we mentioned was that you had over $300 million growth in total credit. It means that banks lent more than $300 million, but when you net out the ongoing repayment, that's the top up. So banks are seeing overall much more applications coming through, and they're approving more of them, and they would like to lend even more than they are lending. And that is where, when they start to look at where applicants are not as successful, they want to see the issues around people not having too much debt burden pre-existing, or that they can see more clearly that they have jobs that you can tell it's a permanent job, as opposed to perhaps temporary or a contractual arrangement where the bank might not be certain that it can match the term for the loan. The credit bureau, to our understanding, is also helping banks in terms of completing their assessment. So that's positive, and it's going to further strengthen that framework that they use as we get more of the non-bank lenders to become consistent reporters to the bureau, and as we get the utility companies to get fully enrolled in reporting data. But the credit bureau is a learning process. It has some bumps to the extent that people need to also occasionally go through the process of correcting any misinformation or inaccuracies that may be in their credit records. That's normal as a part of any credit bureau system. So it means, though, that us, or the subjects who are in those credit reports, we are now learning how to look after our own interests and troubleshoot any issues that may be in our credit record. So that's a positive as well.
The collateral assets registry, has that been implemented as yet, or how far is Central Bank on that?
We've made very good progress on the collateral asset registry. A lot of the work up to this point has been in terms of how we are laying out the framework. The collateral asset register will be administered by the government, and I think through one of the registries that has already been, through one of the registrars that has already been appointed. So what the central bank's role in that process right now is working with the registrar, the Attorney General's office and related entities, to make certain that the software or the technology platform that is applied for the registry takes into consideration all that we might need from an administrative point of view. And so we will be working very closely with them in how that register is developed, the technology for the register. So we're supporting that work, and that is the most pivotal issue now in terms to advance. And then we also have to work with the Attorney General's office and the registrar to put in place regulations so that banks and others would know how they should interact with the registry.
Those discussions regarding check elimination, I think the target is end of this year.
We've not said anything about elimination. We're focused on having a steady and orderly progress of reducing reliance on checks. But insofar as the end of 2026 is concerned, or the period ahead of us is concerned, there's ongoing evaluation in terms of what's happening in the payment space. Some of the work, insofar as we are important emphasis is in terms of payment, is getting what we have now to function more efficiently and faster. So the fast payments focuses on allowing for more real-time transfers and settlements to the point where at the cash register, we can have more real-time settlement, as well as in the online space. And again, having all of that, fully integrated with how the CISAN dollar operates within that space. So it's real-time in terms of the digital currency, and it's real-time in terms of transfers in general. And so insofar as the check reduction focus is concerned, we're more broadly concerned about the issues that are impacting the efficiency within the system, including efficiencies around even the setting up of accounts for businesses to conduct transactions, businesses and individuals.
The Caribbean payment system, I know, where's that right now? I know there was some work done on it, but
Yes.
testing, I guess, is done.
Yes. The acronym that I've heard used is CAPS, or it's a Caribbean Payments and Settlement System, Pan-Caribbean. And so the central bank is one of the institutions that will be participating in the regional pilot to test how we can have real-time payments across the Caribbean jurisdiction. Work around advancing the pilot is expected to progress during 2026.
So, I guess later on this year, we're expected to have our mutual evaluation. So how far has central bank and, financial services gotten in terms of preparation, and what exactly does that work entail at this point?
Yes. So you are referring to the mutual evaluation that the Bahamas is going to be exposed to for the Financial Action Task Force around the effectiveness and sufficiency of our framework for money laundering, terrorist financing, and proliferation financing, countering those types of activities. So we are very advanced in the preparation. It involves all of the financial sector regulators in the Bahamas, as well as the enforcement agencies, which include the Attorney General's office. As a matter of fact, the Attorney General's office leads in terms of the coordinating mechanism, and then you have the Financial Intelligence Unit. There are two parts to that preparation. One is satisfying ourselves that we have the legal framework in place to technically satisfy the principles that are involved in terms of anti-money laundering, et cetera. And then the other side of that is that in practice, demonstrating that we are effective in implementing the framework. And so that's work that's ongoing. Effectiveness means that from a regulator's point of view, from a jurisdiction point of view, we know and we can classify the types of risk that the Bahamas might face in terms of money laundering, and that we can show that we have the kinds of systems and controls in place to manage those risks. We also have to be able to demonstrate that our financial institutions and extend beyond just banks, insurance companies. The financial sector is defined to also include a lot of the professional services that provide, some level of activities for the public, that they understand what the risks are in the Bahamas, even in the context of their respective businesses. And they too are effective in terms of how they manage those, in terms of know your customer, the due diligence, and all the other systems that apply. So that's what's happening now. And as we move into the fourth quarter of this year, we will likely have visiting members from the assessment team for the Caribbean Financial Action Task Force who come through, speak to the regulators, speak to the industry and all the other important stakeholders, and get a feel for how we're doing. So there's a lot happening, and we anticipate that we will be ready to complete that process from a visit point of view by the fourth quarter. We don't get our report, though, until 2027, but everything that we do in 2026 feeds into that process.
Anything you can say about Sand Dollar growth and acceptance?
Well, we're making progress, but we are focused at present also on ensuring that some of the inroads we make with the fast payments systems complements the Sand Dollar framework. We've also restarted our engagement with the government, and it's focused on preparing the government to be more seamlessly able to process Sand Dollar transactions, and to ensure that the government, from a digital electronic payments perspective, is fully ready for whenever we get to the fast payment outcome. So the government sector is very critical to our efforts in terms of getting to the next stage.
And how far are we with agency banking and the legislation around that?
Agency banking, the central bank has gone through the public consultation process. We've gotten feedback, and we are in the process of, I think, finalizing some guidance notes and guidelines that will allow us to look at proposals that might come in for setting up those types of arrangements. We also at the point where we should begin to look at some of the existing arrangements which are akin to agency banking, and satisfy ourselves that from a principal point of view, they also align up with some of what we want to see in those agency arrangements. So most of the heavy lifting has been completed, and we're now at the stage where we begin to see in a more structured way what's out there. But I just wanted to caution that there's no expectation in the near term that every financial institution is suddenly going to have agency arrangements, but there are some of them that might come forward in the near term and advance some of those agency arrangements.
What's key on the central bank's agenda this year?
That's a good one. We're doing a lot of stuff, important stuff. So sometimes I try not to say, well, this is key versus what's not. But if I had to say what is key, it would be that from a strategic planning and strategizing point of view, we are developing our work plan and agenda for the next 5 years. So, and it touches on everything important that we need to do, whether it's in banking supervision, payments, or in the exchange control and related space. In the current year and period, clearly for us is continuing to advance what's happening in the payment system space in terms of the modernization. We've also, as you would know, towards the end of 2025, did a lot around the public consultation around reforms to a series of legal templates. And so for us, we would expect that we would get those through the parliamentary process, during 2026, because then it does create the pathway for some of the improvement that we can do in terms of the regulations in the banking sector that focus on stability, et cetera, as well as the work that we've scoped in terms of improving the regulatory framework for credit unions. So there are several issues that are summarized in the legislative framework that we did consultation on. It is going to be important for us to advance those, or to continue to advance those this year.
You said 5 years, your reappointment is for 2. It's your last.
Well, the central bank is bigger than any of us, and so we always mindful that when we look at what we have to do, 5 years helped in terms of what you prioritize immediately versus what you accept. You might have to start, or what you accept will take more than a year or two to do. So from that point of view, it doesn't line up necessarily with how long the governor intends to be here, because what we do is also always making certain that the central bank in the Bahamas is aligned and is keeping up with the frameworks that are in place globally. And those frameworks,